Welcome to the August 23rd, 2019 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report, and hopefully this video serves as a nice change of pace for subscribers, but also gives some insight as to how we set up our charts, what indicators we use, what time frames, etc. So first up, we're going to run through the broad market, the price and volume action on the broad market averages, then cover current open positions in the model portfolio, and then on to what setups we see potentially in play over the next few days. First up is the NASDAQ Composite, which looks to be in chop mode here, unable to punch through the 50-day MA and resistance around 80 or just below 8100. So it's about a 5% wide trading range. So unless the price action breaks down definitively below the range lows or above range highs, the only thing we're left with that could possibly change the technical picture would be for the NASDAQ to, say, sell off a day or two and then put in another follow-through day, a 1.7% or more gain on higher volume, which would generate another buy signal in the timing model. And that could come below the range lows. It doesn't have to break out above range highs to produce that signal. But that would be the only case in which we'd be able to turn bullish in the timing model prior to a breakout. Pretty much the same scenario exists in the S&P 500. And in the Russell 2000 small caps, we have yet another chop vest, but this range is twice as wide as the others. It's about 10% width. And IWM is also below the 200 AMA, which there is some concern if it can't recover back above the 200 and say the NASDAQ and S&P begin to sell off, IWM could break the range lows, and from there we'd have to see how it reacts. As if there was a definitive breakdown, that could signal the beginning of a new trend emerging with a few weeks of lower highs and lower lows. ZM, half position triggered above Wednesday's high. The price did fail to hold above the 50, but we're only in for half position. We're going to add above the highs here. And the stop is down below 89.30. Twitter were long from a few weeks ago around 42, so it's basically just about break even. I think it's looking pretty good. This is a new trading range here. So as long as it stays within these two trend lines, it should be constructive price action. MedPace were long from around 78. Failed to break out here to new highs, but it's just chopping sideways above the rising 10 MA. So far, so good. INSP were long on a pullback entry to the 20-day EMA, and we're looking for the price action to pull into the 50 MA and then bounce back up. We're looking for the 50 MA to provide support, and our stop is below 62 in this reversal candle right here. This is a half position, and we're fine with that because we know we're going to have to be a little patient here with the price action, as it may have to find support at the 50 and then reverse higher if it can and punch through resistance. And with GH, we had a limit order at 102 looking for a slight pullback from Wednesday's close. The price did open much lower and sold off sharply, but it did manage to close above or right at the 20-day EMA off the lows of the day, which is a good sign, as now there is one reversal off 95, and here's the second reversal off of 94. Both dips below the 20-day EMA, close back above the 20-day EMA. So hopefully here, GH can hold above this 98 level for the next day or two, maybe chop around, and then attempt to break this downtrend line sometime next week. In terms of setups of what we're looking at right now, on the right-hand side here, we have FNKO with a ton of chop here over much of 2019. Price action has tightened up a bit. And if it can break this downtrend line here, around 24 or 23.75 could be in play. Exact Sciences also potentially in play on strength above 122. Or if there's some sort of reversal candle here off the 50-day MA, rather than entering the full position on strength at the obvious breakout point, one could establish some size off the 50-day MA. OLED is a tight trading range at highs and possibly all-time highs here. I believe so. So it's trading in a tight range at all-time highs, which it recently set. Look for either some sort of reversal candle to develop on a breakdown below the 20-day EMA, or look for a breakout on volume above 218. Plan reports earnings on 8/27, and what we like about this is the potential for an earnings gap up. So we'd look for the price action to chop around in a tight range, and then in response to earnings, it would gap up above range highs here, and that would be something you could buy on the open, maybe over a 2 or a 5-minute high. And the last setup here we're looking at is TEAM. There's the downtrend line. I think if the price can get above 146, it could potentially be in play with the stop about 3.7% lower. One could even go as low as, I think, 136.50. It's 6% away. That's something to keep an eye on as well. And if you'd like to learn more about our style of trading, you can head to our blog, which is at morpheustrading.com/blog, where we have a ton of articles on the type of trading we do, all kinds of different entry, exit techniques, how we scan, how we set up our scans in TC2000. Again, thanks for joining me and have a great weekend.